Hello traders, and welcome to another weekly Forex forecast. In this video we will explain briefly how we have been anticipating yesterday this fake spike down in the US dollar. We have updated our members. If you are not already a member, consider joining with the link in the description, which you can still get access to a 2-week trial. We also conduct daily live sessions Monday to Thursday at 5 p.m. GMT. So what we have said is that the dollar is still within a correction, and we are still expecting more upside in the dollar. Volatility in the market should remain high still for the next 2-3 weeks. Okay, so we are not looking to get any signs of, let's say, trend reversal or anything like that, because everything is pointing out towards at least one more leg higher in the US dollar. So this is what we can see coming up next for the next week as well. For dollar yen, we are still expecting the market to continue pushing higher. We do not see yet any signs that is going to give us a bigger drop. However, it's also possible that this market can also give us alternatively this type of move. So this is still also possible. We do not like to trade this market at this stage. We have informed our members why. And we'll see what will happen in the next week. We have provided another 2 trade recommendations to the members, which you can find if you join us with the link in the description. Regardless, we do not see this market still at the stage that is going to give us a bigger reaction lower. It has still room that can go up, so it remains to be seen what happens in the next week ahead. For the euro dollar, we are expecting the pair to continue lower from these levels. We have informed our members about this specific move right here on Thursday, how it was a fake out move. Again, you guys are missing a lot of information which you should be able to get if you become a member. So we are expecting for the next week ahead at least to see this drop towards 107,200 area at least, to at least retest these lows. Of course, the bigger picture and the possibilities we have always explained to the members what we can see. So consider joining. Otherwise, for the next week, this move is very, very highly likely to happen. For the pound dollar, same idea. We are still biased to the downside. After this sideways move, we got the move lower. Then we have a correction right here. As you can see, this is a corrective move. And we are expecting the market to still come to the downside after this corrective move. Nothing has changed. So it's still just part of the choppiness we have seen in this pair in the last couple of, I would say, weeks. So at the end of the day, the highest probability chance is to see a resolution lower. So for the next week ahead, we remain biased to the downside. For the pound yen, we can see some type of confusing moves coming ahead, but the highest probability is more biased to the downside for the coming week. However, we do not really like to trade this one, as we have informed the members. It's at crucial levels which the market can even give us a lot of volatility, like ups and downs for the next coming let's say weeks before it give us a bigger drop lower. So we need to monitor it and take decisions accordingly. At this stage, we can see a possible drop with another spike before another drop. So both, let's say, views are possible. But in any case, the main idea in this market is that nobody should be looking to buy at this stage, because the bigger move should be to the downside overall. EURUSD, as we have said, for the EURUSD, we are still trading higher from this cycle from the 2nd of January, right, this year, 2024. And we have been informing in the previous videos as well that this was going to be a consolidation before the next move higher. So we can see how this was playing out very nicely. Now, anytime the market, as far as it's above this area right here, 164, should be giving us a push higher towards 167.68 area. Okay, so we are not interested in selling this pair at all at this stage. For gold, we have said that we do not like to trade gold at this current market conditions and cycle. It doesn't give us any sort of proper setups for our system. You can see that it's moving up and down more or less $20-30 on average, so it doesn't give us any clear setups to go for anything specific. We can still see some choppy price action in the next week ahead, perhaps a small correction, one more push up, and then another drop, something which is more complex. And we are not interested to trade at this stage gold unless we see something specific that we have been informing the members in the live sessions and in our weekends member only market overview report and video. For oil, we have been saying to the members as well that in the last videos that oil is trapped within this corrective channel. And anytime this market can break to the downside, either with another push up or from current area, it can break to the downside. But we have said also that we are not looking for any trade setups at the moment because this choppy structure can continue into the next 1 to 2 weeks as well. But eventually we should be getting a move lower, which is the highest probability chance. If it breaks higher, it's going to be a double structure. We have explained that to the members as well. So we are not looking for any setups at the moment in oil, but the bias remains more on the downside in the longer picture. For NATGAS, we have explained also in our reports and to our members in the live sessions how it is still trading within the cycle from 9th of January 2024 and how we expected to see a possible bounce at this stage and then another drop lower before we get a bigger reaction. Of course, the bigger picture is much more complex, so we have been explaining to the members what we can expect. If you want to see our bigger picture analysis, you can join with the link in the description. Otherwise, for the next week, natural gas can still trade a little bit lower, and then it can give us another type of reaction around this area. But it's not going to be anything massive, so it's still trying to balance itself out over the longer picture. Now from the indices, the SPX, S&P 500, cash market, we have been explaining to the members this week about the possible moves, especially in another index that we have personally shared a trade setup recommendation, and how we are ending the cycle still from 27th of October 2023. And we are still within this rising wedge, okay? And coming in the next week, we can expect to start to see this opening lower, and eventually it's going to turn out to around at least this area right here for 4,800, 750 area to retest this area right here, and from there we will see what the market wants to tell us and what we can expect next. We are no longer interested, as we said, to buy anytime from these levels. We have been saying that because the bigger move is going to be a resolution to the downside to start correcting this cycle right here. Concluding with triple Qs, the ETF. We can see how we broke this rising wedge and how we got this bounce right here. As you can see, it took by a small margin the highs from 12th of February. That was, we have informed the members, that was like a trap. So now the market anytime should start giving us the move lower to at least this 400, 405 area. and then we can see what the market wants to do next. So we will not be looking to buy at these levels as we have set, as the bigger move is going to be to the downside. Okay, with that note, I wish everybody a great weekend and a good trading week ahead. Like I said, for those that want to get our insights and in-depth analysis, consider joining with the link in the description through BMC page. We conduct live sessions between Monday to Thursday, 5 p.m. GMT. And also we have a trusted broker cashback program with One Royal, which you can consider joining and trade, and you will be receiving at the end of each calendar month a cashback based on your trading volume. If you have any questions, guys, you can email us at support@roiforecast.com, and we'll get back to you within a maximum of 24 business hours.